So-called tech metals are in bullish mode at the moment. With that in mind, let's talk tin now. How's it fit into the burgeoning tech sector? Well, let's talk now to the Chief Executive of London AIM-listed AfriTin, Anthony Viljoen, who joins us from Johannesburg. Anthony, good to catch up with you again. We've not spoken for a number of years, but I've been monitoring the share price move in AfriTin, which we'll take a look at in just a few moments' time. But let's begin, first of all, by asking you precisely how tin fits into this, as I said, a burgeoning tech sector at the moment.
Yes, hi Jeremy. Good to make contact with you again. For many years we've been very bullish on tin. A lot of people have always said it's not sexy enough, but for the metal space. But we are very excited about tin. We're very excited about the future. Tin is the glue that holds new technology together. So it's a critical component of the evolution of new technology metals. And a strong demand is being driven in the semiconductor space, specifically on chips. You'll read a lot about that in the news recently, that America and China are looking to bring their semiconductor production in-house, and the critical components of those semiconductors is tin.
So how's AfriTin fit into all this? What are you doing? I know that you have got exploration, you've got development as well, and also you are a producer.
Yes, very much so. Our differentiator amongst all the other tin listed companies in London is that we are actually in production. We're shipping product. We're in the global market already, and we're in expansion mode, which is always very exciting and not a position that a lot of junior miners get to.
Now, you're based in Johannesburg. The lion's share of the business, I believe, is in South Africa, although you actually have Namibian operations as well. Explain a bit more about the footprint of the business, because you're expanding beyond tin, and I notice actually you've got some lithium under your belt as well, which another area of intense interest at the moment.
Yes, the lithium is actually very exciting. It was never mined previously, and what we discovered that it's associated with our existing operations. So it gives us a byproduct upside potential on the lithium, which is really, we've got two of the critical metals coming out of one plant, which is very exciting. We are based in Namibia. It's probably the operations are based in Namibia. Probably one of the best jurisdictions in Africa to invest in. So we're looking to expand our footprint not only within our existing mining license area, but in the region that we believe will eventually open up to be one of the sort of preeminent technology mining areas.
And it doesn't stop at lithium either. I think if I just let you talk more about what's happening at AfriTin, because I believe as well you've got tantalum. And we're talking now about some of the metals I know absolutely nothing about, but you continue to, as I say, expand the footprint. What else are you trying to do at the moment, and how far developed are those more minor parts of the business?
Yeah, so we, within our license portfolio, we've got a number of different historical mining areas, the biggest of which is the West area that we're mining at the moment. But in addition to that, we've also got the other historical mines that were operated sort of before the technology boom. But as luck would have it, these are all technology metals that are very relevant today. The next deposit that we're looking to target is Brandberg West, which is a tin and tungsten deposit. So we're wanting to follow a similar development path with that. So still relatively early stage, but we've got a lot of upside potential for the company. So the benefit of having cash flows means that it allows us to grow and expand a lot quicker because we've got the team in place and we've got the footprint in place.
With that point in mind about positive cash flows, I think at the last count you had something like £7 million of cash on the balance sheet, and also I believe as well project support from banks. How strong is the balance sheet for what you want to do? You've been talking a lot about some different geographical areas. You've been talking a lot about different metals. As I said, you've clearly got costs involved in your exploration and development, despite the fact you've got money coming in from your production side of the business. How are things looking forward? Are you going to have to come to the markets for more money, or are you self-sustaining at this point?
Jeremy, we're self-sustaining at the moment. We can obviously, if we wanted to move quicker, we would look at the equity markets, but there's no need at this stage. We've got a very strong support from Standard Bank of South Africa. That's currently the biggest bank in Africa. And in addition to that, we've got a lot of other sort of development banking opportunities that we're looking at. So, we're in a very unique position for a junior miner in that we don't have to tap our shareholders unnecessarily and dilute them unnecessarily. As you mentioned, we've got free cash flow that keeps operations humming and helps the business out. We've got cash in the bank, so we've got a really good balance sheet, a really strong balance sheet, and we're fully financed for all of our expansion plans going forward.
Yeah, I want to bring up a share price chart because I think this is going to describe more about how investors are thinking about this, because we got this rise recently to this new record high. In fact, we're not too far away now, I think, from £100 million market cap. So that could be a significant milestone to see this stock trade above for any length of time. We've been talking about tin. Tin is very, very bullish at the moment. How much of what we've got in the share price here is talking about tin in particular, and how much of it do you think is pricing in expectations for other parts of the business in other parts of Africa?
Well, as a good mining CEO, I'll tell you that I think that our share price, although it's been very bullish recently, I still think is very much undervalued. If you see, I don't even think that our lithium is taken into account here, despite us having one of the biggest JORC compliant lithium deposits associated with our production. I think that's it's great that we're getting recognition in our share price, but I still believe that there's a lot of upside that is still to come as we go through our development path.
So the rest of 2022, we're just about to move into the second quarter, of course, of this year. Things are moving very fast this year. We've got to talk very briefly about some of the headwinds that everybody's been facing. Of course, over the last couple of years, we've had lockdowns, we've had COVID, we've had all sorts of problems with that, and the associated difficulties running companies with people not being able to attend sites and so forth. And I know that South Africa has been affected by this quite a lot. And then, of course, comes what happened in 2022 at the beginning of the year here with the Russian invasion of Ukraine. Just very briefly, give us some detail about how you've had to cope, and indeed have coped, clearly, having looked at the share price, with this very well. What have been the headwinds for the business, and do you see much of those continuing into the rest of this year?
Yeah, look, the two biggest ones is a disruption to global supply chains, which means accessing components and steel has been a particular hindrance on our plant expansion plans, and then obviously also inflation. Those are the two elements that we can't really get away from. It's affected our supplying end product to the users, to our off takers, but Jeremy, our core fundamental is always focus on what we can control, and then as long as we've got that under control, everything else is you in the same boat as everybody else in the world. Doesn't matter how big or how small. So we just got to keep our heads down and focus on what we can, what we've got control over.
Yeah. So rest of 2022, what you got your eye on from here?
We've got a really big 2022 ahead of us. So we're going to be releasing a 5-year strategy that sort of details exactly how we anticipate going about the growth of the company. We're looking to quantify that hopefully in a feasibility or preliminary economic assessment. We've got drilling ongoing to increase the confidence of our resource as well as expand the resource. We've got test work on the lithium and tantalum and tungsten byproducts. We are implementing pilot plants specifically on the lithium and the tantalum, and we're also looking to introduce ore sorting, which will greatly enhance our feed grade into the plant. So there's a lot going on. There's a lot of news that's going to be coming out, and we're beefing up the team, and we're really in a very strong position and excited about what's going to transpire in 2022. And hopefully the macro elements play in our favor, but we're long-term investors, long-term developers. We know how to ride the cycle, and we just got to keep our heads down and get going at it.
Look, I wish you well for the rest of the year, and of course I look forward as well to catching up with you again a little bit later on to check on progress, and we'll see how things are developing. But Anthony, in the meantime, thanks indeed for joining us. It's been a pleasure being able to catch up with you again. Anthony Viljoen, who is the Chief Executive of London-listed AfriTin. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.